Hi, my name is NHYIRA. Welcome back to our lecture videos on public sector accounting and finance. This is Premium ICA lectures. The next thing we want to consider briefly is the government revenue and expenditure. Very key aspect of your syllabus. Very key aspect of your syllabus. Now, government over the year has spent a lot of money in relation to rendering of services to the citizens. Maintenance of law and order, provision of social amenities, building of infrastructure facility, and ensuring that the country is running well. Government has spent a lot of money in relation to that. Also, this money spent has come from a lot of sources and has been dispersed in different ways, and that means that we have to look at where government gets the money from and where does the money go. So if the government receives money, it comes into the central treasury or the consolidated fund. Where is it dispersed to? So that is what we want to look out for, the various sources of government revenue and how government raises revenue, and then the payment process, that is how government spends the money. But what is a revenue? What is a revenue? Revenue constitutes the ordinary income of government, being composed of taxation and earnings, rents received for the lease of government lands or building, interest on investment by governments, and so on. So these are refers to as revenue. Normally we would define revenue as the increase in net worth resulting from a transaction. The increase in net worth resulting from a transaction. So when we're talking about revenue of the government, it can come from dividend received from shares that the government holds in a company like Anglo Gold Ashanti. It can also come from issues in relation to taxes raised, which is a major source of government. It can come as a result of royalties paid to the government by companies using land for mining and other things. So these are what we call the revenues. But there are four main sources of revenue to the government. Four main sources of revenue to the government. The first one is called taxes and other compulsory transfer imposed by government units. So by law, tax, that's the major source of government revenue. So that is the first thing. Second, property income derived from the ownership of assets, sale of goods and services. Sometimes government deals with the sale of some goods and services, not to really make profits, but still it is a source of revenue to the government. Then voluntary transfer received from other units, that is grants or donations. So these are the four major sources of government revenue: taxation, property income, sales of goods and services, and then grants. These are the four major sources of revenue to the government. But the revenues, the sources of revenue can be, these four sources of revenue can be categorized into two. We have what we call taxable revenue and then non-taxable revenues. So tax revenues are the revenue that the government raises from taxes. Now, what is a tax? A tax is a compulsory charge levied on goods and services or income earned by individual entities or corporations by the government. So government may levy a tax on an individual, your income, but it's a source of tax. You pay the tax and it's a source of revenue to the government. So taxable revenues. Taxable revenues also can be seen or can be recategorized into direct tax and then indirect tax. The indirect tax are the taxes that are levied on the amount received by individual or profits made by entities. So we have the personal or the individual income tax, we have corporation tax there, we have gift tax there, we have the capital gain tax. So all these taxes are direct tax in relation to government. Then the indirect taxes are the taxes normally levied on goods and services, and it is suffered by the people who buy the goods. So if government puts in tax, raises the price of a product, raises import duties, what is going to happen is that that will be a source of indirect tax and it's a source of revenue to the government. Then we come to non-tax revenues. These are revenues that the government gets not because the government levied any tax, not because the government compulsorily charge people to pay the money. This includes grants received from some non-governmental organization, IMF, from China, from USAID, from donor countries, from Danida, that kind of level or that kind of things. So issues about grants are non-tax revenue, and then property income, sale of goods, fines, penalties, and other revenue. So when you go to the let's say Registrar General to go and register a company, that is a source of revenue to the government. What is the Registrar General Department doing? They are charging you for registering your business, and that money goes into the central treasury. It's not a tax revenue. Also, if you should go to the DVLE for your license and so, or for vehicle inspection, and so all the fees that you pay goes to the government. When it comes to the security industry or the security sector, when you go to court and you are fined for something and you pay some amount of money and it goes into the government, is a source of money to the government. So these are what we refer to as sources of government: taxable sources and then in non-taxable sources. Now we can have a breakdown of the revenue of government in this, and you have it in your book right there. So let me go through that with you quickly. Taxes of international transaction, value added tax, taxes on personal income, taxes on domestic goods, grants, non-tax revenue, divestiture. Now, one source of non-tax revenue is where government sells off some public institution. Yes, so or government, yes, government has a public institution, or there is a public institution and it's being sold off. It's a source of revenue to the government. We discussed that in our earlier video in relation to the government activities. So these are what we call the sources of revenue to the government. Now, normally when we talk about that, we are talking about the central government, all right? The central government. But the spending units, that is the ministries, department, agencies, or metropolitan municipal district assemblies, also have a way that they get their revenue. So let's look at the sources of revenue to the MDAs and then MMDAs. First is the Government of Ghana transfer. All right. So Government of Ghana transfers a certain amount of money. It's called appropriation. That is what has been approved by government to be given to this spending unit. So whatever budgeted appropriation that is allotted to them is a source of income to them. The second source of income is what we call internally generated fund or revenue. Now, so there are some acts that empowers some ministries, some departments, some agencies, some metropolis to charge certain tax or to raise certain incomes. These are called the internally generated funds. Some of these acts includes the following. Article 174 and Article 179 of the 1992 Constitution, Ministry, Department and Agencies Retention of Fund Act, Fees and Charges Miscellaneous Provisions Act 793, Fees and Charge Amendment Instrument of 2001 LI 1986, Part 3 of the Financial Administration Act Act 654 of 2003, and Part 3 of the Financial Administration Regulation of 2004. So all these acts empowers some spending units to raise some amount of money, levy some taxes, charge people for services, fees and fines, and these are all the money they raise as a result of these acts empowering them to raise our called internally generated fund and their revenue to the spending units. What are some of what constitutes the internally generated funds? What constitutes it? We will talk about 5 things. 1, taxes on properties, taxes on goods and services, property income, sale of goods and services, fines, penalties, and forfeitures. So all these are some of the internally generated revenues or funds that the spending units, ministry, departments, and agencies raise. But it has also been argued, just like how Parliament has been judged or has been seen as not being efficient or not operating well, it has also been argued that these spending units are not able to generate more funds, or they are not able to get more money, or they could get more money than what they are getting. So they are not efficient and they are not effective. So how do we improve from there? In other words, how do we ensure that these ministries, departments, and agencies are raising enough revenue? So we want to look at ways to improve internally generated fund of local government. There are about 10 points there in your book. I will discuss about 5 of them with you here in the video. Recruitment of quality and competent revenue staff. Very important. So we have to recruit quality and competent staff. 2. Outsourcing of revenue outsourcing of revenue allocation to competent commission collectors. That is also true. Proper supervision of revenue staff to prevent revenue leakages. So we have to have a proper submission or supervision system, so that embezzlement of funds will not take place, leakages will not take place, money will not be collected but will not go into the treasury. Rotation of revenue staff to prevent collusion is very important to that. Periodic valuation and revaluation of taxable properties to ensure proper rates are collected. So when we come to property rates, it is charged. So the MDAs or MMDAs themselves must regularly value some of these properties to make sure that the right rates are being paid for. Then accurate data collection to ascertain improve revenue forecast. We can talk about improving the monitoring of revenue collection, and we can talk about motivation of revenue staff, including periodic awards to induce productivity. So yeah, people are collecting the money, but if they are not being motivated, they bring a huge sum of money and they are not being motivated, so they are not being paid a lot of huge salary or appropriate salary to be able to enable them to service their debts, take their children to school. Then it will motivate them to embezzle funds. So to prevent that, we have to make sure that we give them good salaries. But another question that has popped up is why government has failed to reach revenue targets. So always the Minister of Finance will come and stand in Parliament and read the budget and say that this year we are going to generate a revenue of say 3 billion Ghana cedis from this source, from that source. But why has government failed to achieve these targets? So we want to look at causes of failure to meet revenue targets. Causes of failure to meet revenue targets. 1. Corruption on the part of the staff of the revenue collecting agencies. So there is a lot of corruptions on the part of them. Some of them take the money but will not actually send the money or pay the money the way it has to be paid. 2. Improper records keeping by the taxpayers. A lot of taxpayers are illiterate and they are not well educated on how records are supposed to be kept. So when tax authorities come, they are not really sure of the income that people are earning, profits that businesses are making, so that they can be able to charge the correct taxes. Lack of motivation. We've said that in relation to how to increase the revenue target. So we have to motivate the staffs who are taking the money so that they will be able to do their job very well. Revenue collection agencies not integrated. So formerly revenue collection agencies were not integrated, but now they've all been integrated into the Ghana Revenue Authorities, and all of the revenue are collected and monitored by the Ghana Revenue Authority. Difficulty in locating taxpayers in the informal sector. Yes, it is very important or very difficult to locate taxpayers in the informal sector, and they are spread across board, so it is very difficult to locate them. Then also lack of logistics for tax collection. The kind of resources, vehicle, expertise we need to be able to collect the revenues by these revenue collecting agencies, they don't have it. So once they don't have it, they will not be able to collect appropriate revenue. Then lack of training of revenue collecting officers. So lack of training of revenue collecting officers as to how they must develop themselves, how they must look at the accounts of taxpayers and charge the right tax in relation to that. So these are what we refer to as the causes of failure to meet revenue by the government. Then finally, on revenue, we want to look at another major source of revenue. Did I say major? Not really major, but it's a source of revenue to the government, is borrowing. 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 Every government in the world borrows some amount of money. United States has about $3 billion debts lying down. Ghana also has a lot of debts lying down. So there are borrowing. Every country has some amount of borrowing that it does. But we want to look at the source of government domestic borrowing. If government wants to borrow money domestically, if you want to borrow money foreign, you can go to China, you can go to US, you can go to UK, you can go to the IMF to go and borrow money. Yes, these are external sources. And they go and borrow big, huge sum of money and come and use it in the country. But in the domestic market, how or where are the sources of government domestic borrowing? One is the issue of security. So governments can issue treasury bill bonds, 91 days bonds, and people can come and buy 5-year bonds that people can come and buy. Recently, Ghana has issued, I think, a $2 billion bond by the Ministry of Finance was issued, and a lot of cases, politics have been played around it, but we are not interested in that. But it's a source of government. What has the government do? The government has issued bond and it was subscribed by people and then they bought the bond. That money is going to be used by the government to undertake fiscal or to undertake economic policies. 2, commercial bank and institutions. So the government can go to SNIT, the government can go to other commercial bank, can arrange loan with some commercial banks or financial institutions, take the loan and use it to undertake a project. Domestic supply credits. These are some credit controlling firms. Let's read that well. These include issue of letters of credit to local contractors to enable the contractors access credit facilities from the bank. So government doesn't have the money to and pay the contractors now, but the government can issue a document to the contractors so that they can send it to the financial, in other words, they can send it to the financing house and the banks can give them some loan so that they can use it to undertake the project. So in a way, the contractors are borrowing on behalf of the government. It's a way of borrowing. Then advances from the Bank of Ghana, the government can go to the Bank of Ghana and borrow some money from the Bank of Ghana from the excess of the consolidated fund to undertake a specific project. So when you talk about revenue, these are the major things that you have to understand in relation to revenue. Now, after we've looked at the sources of revenue, let's now look at the second thing, expenditure. Where does the money go? How does government spend the money? How does the disbursement of the money takes place? When the money is received, put into the consolidated fund, it has to be paid out. How does it go? So let's look at government expenditure quickly. Now, the government is seen as the largest employer in every country. So in every country, the government is seen as the largest employer and the spender in each country. Now, expenditure or public expenditure can be defined as expenses, commitments, obligations, and transfer payments of government. So all the expenses to be incurred by government are referred to as the government expenditure. But let's look at a breakdown of the government expenditure. It includes personal emolument, very, very important. Social security, very, very important. Pension and gratuity, administration, services, investment, district assembly common fund, petroleum related fund, Ghana Education Trust Fund, road and other non-road areas, public debt interest, then utility price subsidies. So these are a couple of the elements of government expenditure. Largest of them is personal emolument, that is the salaries that government pays to the workers in the public sector, the social security that the government pays, pension and gratuity given to employees. Administration has to do with the day-to-day running of government institutions and organizations. Investment has to do with how much money government want to invest. Is an expenditure. You want to invest in something that they want to do, like the one district, one factory project, is an investment and it's an expenditure that the government is undertaking. Public debt interest and repayment of debt. When government takes debt, it has to pay the debt with interest. So when the government is paying that debt, it's an expenditure that the government is undertaking. But let's take it detail, or let's look into detail and look at the description of the expenditure item. The first one is transfer for salary, wages, and other benefits. This is the main aspect of the expenditure process. So the payment of wages, salaries, and other things of public institutes or public workers is first thing there. Administration expenses, service expenses, investment expenses, pension and gratuity, and we've discussed about these things in relation to all that. Now, when it comes to government expenditure, one thing we have to understand is the modes of funding institutional commitments. In other words, how the government funds the spending units, the ministries, the departments, the agencies. We want to look at that quickly. The first one is appropriation. The commitment of greater number of government institutions are founded by appropriation. An appropriation is the approved by Parliament of annual and supplementary budget allocation to reflect expenditure commitments classified under programs or activities, namely heads, subheads, and etc. So, first thing by appropriation. So, governments can say that, all right, this year the Ministry of Health will spend this money. The Accra Metropolitan Assembly will give them that money. All the districts will be given a certain amount of money. So these are called appropriation. 2. Local revenue. Local revenue is the same as the internally generated fund, and these are some metropolitan municipal district assemblies are empowered by law to raise some local revenue on their own, and that is also a way that the government funds these institutions. The next one there is about transfer of salary, wages, and benefits to the MDAs. Now, government also funds the salary of these MMDAs in relation to the payment of the salary of the people who work in the metropolis. In relation to that is a way that the government funds them. Then subsidies, the government can give subsidies to them. Revenue retention, government can say that, okay, if you raise a revenue, like the Ghana Revenue Authority, you raise the revenue, a percentage of that revenue should be paid into the consolidated fund. The rest, use that fund to manage your day-to-day running of the institution. That is the retention policy by government. Then government borrowing on behalf of some MDAs, and then government lending to the ministries, departments, and agencies. So these are the various modes through which government funds the spending units. Now we want to look at the public expenditure. Now you see, public expenditure has been divided into two. We have the statutory expenditure and then non-statutory expenditure. Now, what is a statutory expenditure? Statutory expenditure are the expenditure which are paid, which do not need the approval of Parliament, period. They are paid out of the consolidated fund and do not need the approval of Parliament. So they are statutory. By law, we have to pay them. So it is not that every year we go to Parliament and say that, do we have to pay this? No, it is by law they have to pay it. Now, what kind of expenditure of government qualifies to be statutory expenditure? Pension and gratuity. It must be paid by law. So every year, every month, it has to be paid. It's by law. 2. District Assembly Common Fund. Once it has been agreed by Parliament or approved by Parliament that 7.5% of all revenue collected must be paid into the District Assembly Common Fund, it has to be paid into it. Petroleum related fund. Whatever amount that has to be paid into the petroleum related fund, we have to pay it into it. Ghana Education Trust Fund, Road Fund, public debt interest and public repayment of debt. So if we have taken a loan and the loan is due for payment, it has to be paid. Parliament doesn't have to approve whether we should pay it or not. We are supposed to pay it. So it is called statutory expenditure. Now, the non-statutory expenditure are the expenditures that needs Parliament approval. In other words, for the expenditure to be paid for or to be incurred, Parliament must approve those expenditures. They include compensation of employees, the use of goods, acquisition of fixed assets, among other things. So expenditure can be categorized into two: statutory expenditure, non-statutory expenditure. Statutory expenditure does not need parliamentary approval, and it includes the following: payment of debts, debt repayment, It also includes issues in relation to District Assembly Common Fund, Road Fund, Gets Fund, among others. But non-statutory expenditure are the expenditure that require parliamentary approval, and they include compensation of employees, the use of goods and services, and then fixed assets. Now that we have looked at the government expenditure, let's now consider the payment procedure of the expenditure. Now, how is expenditure of government paid for? How is it paid for? Now, to look at the government's payments, we have to consider the following key people: the Controller Accountant General, the Ministry of Finance and Economic Planning. Then we have to consider heads of ministries, departments, agencies, or heads of metropolitan municipal district assemblies. So these are the key players in relation to the government payment process. Then we can put in the middle here the Bank of Ghana, because the consolidated fund is an account. The treasury account is with the Bank of Ghana, so everything is paid into the bank account at the Bank of Ghana, and everything is paid out of it. But these are the major players: the Controller Accountant General, the Ministry of Finance and Economic Planning, heads of MDAs, and then MMDAs. But then how does the payment process actually take place? Now, what happens is that when ministries, department, agencies, metropolitan municipal district assemblies requires money, they are going to request the money from the Ministry of Finance. Now, the Ministry of Finance then now give directives to the Controller Accountant General, and the Controller Accountant General will now issue a warrant to the Bank of Ghana so that the money will be sent. Now, before the warrant is issued, a copy of the warrant will be sent to the Ministry of Finance and Economic Planning, then the spending units. So we need money, so they request we need money, and they give it to the Ministry of Finance. The Ministry of Finance look at the budget allocation and say that, okay, Controller Accountant General, kindly authorize so that the money will be sent. Why? Because the Controller Accountant General is the one in charge of the consolidated fund and other fund in relation to the government. So any spending unit requesting money bring their request to the Ministry of Finance, and the Ministry of Finance now directs the Controller Accountant General to authorize the issue of the fund. Now the Controller Accountant General now issues a warrant, and that warrant gives the Bank of Ghana the authority to transfer money from the Bank of Ghana, that is the consolidated fund or the Treasury's main account, and send it to the sub accounts in relation to the accounts of each spending unit or any spending unit that is requesting for the amounts to be paid for. Now, why is warrant an important thing? So let's look quickly at a warrant. Now, what is a warrant? A warrant is a document issued by either the Controller Accountant General or the Ministry of Finance and Economic Planning, empowering the Bank of Ghana to issue an amount of money for an expenditure item to be paid for. So, one, it gives the spending officer the authority to request that payments are made. Alright, so when a warrant is issued, it gives the spending officer the authority that, hey, they say we have to get this money. Where is the money? Has it come? Please send the money to us. It lets the spending officer know how much he can spend. So, Ministry of Finance directs the Controller Accountant General to let the Bank of Ghana send them some money. So, when they know how much money that they are supposed to spend, then they will be able to determine how they can spend the amount. It shows that sufficient funds remain in their vote to cover for expenditure. So if we need an amount of money, if the spending unit need an amount of money, they receive the money. So on the warrants, they record, or it is recorded how much money they are supposed to receive in total. Maybe 10,000 Ghana cedis. So when they receive that money, or when they are giving that warrant and they are spending the warrant, at every time they can now determine how much is left in the accounts to be spent. Then it determines how funds should be used. Alright, so if we are receiving only 10,000 and we have a project of 20,000, then it will determine how we will spend the money. And the last one, it limits the amount a spending officer can spend. For that, just the scenario I raised, we have a 20,000 Ghana cedis expenditure, but the Ministry of Finance, with a ceiling and decision, has only issued with the consultation of the Controller Accountant General a 10,000 Ghana cedis warrant. So it limits the spending officer how much money that they can spend. Sorry. Now let's look at the requirement for issuing warrants. Requirements for issuing warrants and the various stages through which warrants are issued. And that is in your book, and I want to discuss that with you. Warrants shall be issued based on submission of MDA consolidated work or cash plan to the Ministry of Finance. I've already said that. So if the Ministry of Finance, if the spending units bring their plan to the Ministry of Finance, then the Ministry of Finance is now going to give directive to the Controller Accountant General for the issue of the warrants. Now, warrants takes 5 authorization stages. The first one is called national warrants, issued by the Ministry of Finance to the Director of Budget. So it is issued by the Ministry of Finance to the Director of Budget. Authorization 2, ministry warrants, issued by the Director of Budget to transfer approved budgets to the MDAs. 3, authorization warrants, department warrants. Authorization 3, department warrants, issued by the ministries to its departments. 4, divisional warrants, issued by the departments to its divisions. And 5, spending unit warrants, issued by the division to the cost centers where spending takes place. So what are we saying here? There's a national warrant. Then we come to second one, ministry warrant. Then we come to department warrant, we come to divisional warrant, then we go to spending unit warrant. So national warrant simply means how much money do we want a specific spending unit to spend. Okay, so when the money, when we know how much a specific spending unit will get, then we come to the ministerial warrant. Okay, that ministry, how much does or would we want each department to spend? Then we come to the departmental warrant. Then now the department will determine how much each division will spend. Then the divisions will now issue the warrant for each cost center or cost unit within their division to spend the money that has to be spent. All right. How does the government control public expenditure? It is very important because government has to control public expenditure so that people don't spend more than the budget, people don't spend less than the budget, people spend the money for what they are supposed to be spent for, and there is enough reserve for the government to take care of ad hoc or contingent activities. So how does the government control public expenditure? So methods of controlling expenditure. The first one we have there is the freezing of votes. Freezing of votes. Sometimes the government may instruct the treasury to cease the disbursement of public funds for a period. This allows government to build up enough revenue to meet its commitment. So at a point in time, the government will direct the Controller Accountant General that from this date to this date, no money shall be paid out of the consolidated fund. So it frees the votes. So no money will be paid. So it means if you are spending units waiting for money, you won't get it. Why? Because within that period, government is not ready to spend any money. Then quarterly limits. You see, many spending units submit their annual budgets and work plan to the Ministry of Finance. But what happens is that the money is disbursed to them quarterly. So the money is not given to them just at once in a year. It is given quarterly. So that one helps the government to control how much money they can spend each quarter. Then warrants, the issue of warrants. So that means that if you want the money, you request and then we issue the warrant and you have it. Now, if you want money and the warrant has not been issued, then you can't spend the money because the money will not come. So that helps the government to control expenditure. Then across the board cuts. This is a decision taken by government where government reduces how much each spending unit was supposed to have been spent under the appropriation. So maybe according to the appropriation, each ministry is supposed to receive probably 10,000 Ghana cedis. So the government can sit down and say that we are reducing that by 20%. So everybody is taking 8,000 Ghana cedis or 80,000 Ghana cedis. Then when that happens, it means that the government is controlling expenditure. Okay, so these are the various ways or methods used by governments to control the expenditure. Now, let's look at the expenditure control. We have spoken about the key players in our video under regulatory frameworks, and we spoke about the fact that the executive arm of government plays a role, the legislative arm of government, parliament, plays a role, the Ministry of Finance plays a role, heads of department plays a role, and how do we call it? The Controller and Accountant General plays a role. So now let's look at expenditure control by each of these major players in the economy. The executive arm of government. The president, in order to satisfy the provisions of the constitution, also appoints a cabinet committee on estimates to advise him on the contemplated policy measures. So one way that the government or the executive arm of government controls expenditure is that the cabinet committee on estimates is instituted, and they advise government as to how much money can be spent, what projects can be undertaken, what sectors need more improvement, what sectors don't need more improvement. So that is a way of controlling what expenditure, so that we don't spend money for a purpose for which will not bring any returns to the state, so that if there is something we've already done, we don't allocate funds again for that particular thing. Legislation. Now, the parliament controls expenditure by using a lot of tools in parliament. So parliament achieves such financial controls over public expenditure and revenue through the following. First, the Public Finance Committee in parliament. This committee is responsible for the passing of the Appropriation Act for the purpose of authorizing the budget after examination by various subcommittees. So the Public Finance Committee. This committee is responsible for the receipt of the finance bill and proposals of government for the consideration of parliament. So every financial bill is received by the Public Finance Committee. Then we come to the Appropriation Committee. The Appropriation Committee is responsible for the approving and passing of the Appropriation Act, so that it becomes established for authorization to take place. Then examination subcommittees. These are subcommittees of parliament that are responsible for the examination of individual estimates of the organizations. So maybe the University of Ghana makes a budget. All these budgets are submitted to parliament, and the examination subcommittee takes care of it. Public Accounts Committee, we've spoken about them already. They are responsible for auditing the accounts and the auditor's report, and then bringing anybody for query who has been raised to be, in quotes, smelling in the accounts. Then audit service, that is, the Auditor General is employed and he audits the accounts of the state, and that helps us to control the expenditure by parliament. The limitations of legislative control have already been discussed under the regulatory framework of parliament, and we've discussed already about the reasons why parliament has failed in establishing control of expenditure under the regulatory framework. The Ministry of Finance. How does the Ministry of Finance control expenditure? MDAs have to apply to the Ministry of Finance for funds to pay for services. The tradition is that once a year, MDAs present estimates to cover their needs and requirements, which are expected to be prudent, necessary, and reasonable in accordance with the Financial Regulations and Appropriations Act. The minister presents the consolidated revenue and expenditure estimate as appropriation bill to the legislature for approval. So by law, because the spending units are supposed to present their budget to the Ministry of Finance and Economic Planning, we also said that the Minister of Finance and Economic Planning advises them and gives a ceiling about how they are supposed to spend, how much money they are supposed to spend. So by that is the tool and mechanism through which the Minister of Finance also controls expenditure. Then Treasury control, that is the Controller Accountant General. This relates to the whole system of control established in the executive that ensures that the flow of money to the various organizations, and their expenditures. Then we have departmental controls. Now each department in the MDAs also can put into place control mechanisms as to how much money they have to spend, when they have to spend the money, and who has to be given some of the money. Now, at the local government level, or local government institution, there is a way they can also control revenue. If we want to look at that quickly, they can put in place what we call internal controls. Some of the internal measures they can put in place will include issuance of financial authorities, appointment of committees for different services, centralization of all payments. So they can centralize all payments, that okay, if any payment has to be done, it has to be done from this account and it has to be approved by this person. It's a way to control revenue. Establishment and maintenance of internal audits at the department level or at the local government level. Then preparation of estimate of income and expenditure for the year, and then budgetary control and feedback processes. Externally, they can be controlled by legislative control. We've discussed that already. Central government and then the executive control. We've also discussed that already. Control by the general public comment by individuals on local government institutions. Then external audit control from the auditor general. So these are the ways through which that local governments also can control. Internally, they can put in place some measures that they can use to control the expenditure, but they also suffer external factors or external control from the parliament through appropriation, from the executive arm of government, president and the committee on finance estimates, the cabinet committee on finance estimates. Then they can also suffer from the external control from the auditor general, because the auditor general is going to come, he's going to audit the accounts and he is going to ask questions, so he can direct them as to what to do and what not to do. And they can also be controlled by comments made by publics, you and I, that they are not spending the money well, they are raising a lot of taxes, they are not spending money for what they are supposed to spend on. So these are what we refer to when we talk about issues in relation to government revenue and expenditure. So we have discussed about the sources of revenue to the government, taxable sources, non-taxable sources. We've looked at the sources of revenue to the spending units, MDAs and then MMDAs. We have also considered ways to improve internally generated fund, causes of failure to meet revenue target, and we have looked at the expenditure of the government, the various payment processes, how government controls expenditure, and how local governments or the spending units can also control expenditure. But among the things, the key aspect that you have to understand is the issue of warrants. That is how the payment cycle actually takes place, what happens national level, what happens ministerial level, what happens departmental level, what happens divisional level, and what happens at the spending unit level. That hierarchy is what helps us to be able to monitor and control revenue. So this is what you have to understand when it comes to government revenue and expenditure. For any question, you know what to do. You send me an email at the email rolling down there, NHYIRAPREMIUM@gmail.com, and we here at Premium Education and Business Consult will be very much happy to help you to understand anything that you may need. Till we meet again in our next video under public finance or public funds. See you and wish you all the best. Bye-bye.